Let's get back to our big story at 5 o'clock in the business, and we're talking to Jason Quinn, who's the Group Financial Director at Absa Group. Thank you very much for your time this evening, Jason. So in my intro, I spoke about the advances that contributed to the revenue that we saw in the period, Jason. But what were some of the salient features that you saw coming through this set of numbers? I mean, even indicating that you're going to be issuing a dividend that you will have been able to double.
Yeah, super. Thanks very much, Rofhiwa, to you and your viewers tonight. Great to be with you. Look, we're a big organization with, systemic impact in every market that we're in. So the half of a good performance here was actually, given the annuity nature of our revenues and costs, it was a build-up of the momentum we've been able to achieve probably for a number of years coming from our strategic refresh back in 2018. Of course, the macros were tough. They were tough for everybody. I think we navigated, let's call it rising inflation, rising rates, load shedding, lower GDPs particularly well. And so, yeah, a combination of good revenues, 14% up, well-controlled costs, and very pleased with our return on equity also at, almost 18%. So a strong half for us, good operational execution.
Yeah. Is the trend of increasing advances, is that a reflection of the health of the consumer? Are consumers getting healthier? What is your view in terms of that trend that you saw in this particular period?
Yeah, look, we've been able to achieve above market growth in most retail asset classes for the last couple of years. What do I mean by that? In mortgages and vehicles in South Africa, we really re-engineered our customer experiences. Our turnaround times are best in class, and that's been for a couple of years now, where we've been able to get our market share back up to, let's call it just about leading levels in those asset classes. I think the state of the consumer is reasonable. If you look at things like collateral values, cars and homes in particular, holding up quite strongly in our core target market, which, as you know, is sort of middle-income South Africa.
Interestingly, your report that you released today with those interims indicates that the economic outlook is not that great, but you've indicated to shareholders and those of us who are interested in this kind of thing that you'll be seeing double-digit revenue growth in 2022. How?
Well, once again, a combination of the various strategies we've had in place for a couple of years. The momentum is there. There's a couple of things just to think about, though. Of course, we've spent a little bit of time, now in our bank in this conversation, but we've got a very big insurance business, and like most insurance businesses around the world, we paid out extensive claims during the COVID period, and we built big liabilities for potential claims of mortality and disability. Of course, we see a very different experience at the moment. So, if our revenues were up, like let's call it 18% non-interest income at the half, that was assisted by non-recurrence of those insurance claims that came through. So, of course, there's some uncertainty still around COVID, but we expect a similar sort of outturn for the full year there. Continued loan growth, deposits are looking good. Corporate in particular, our corporate activity is reasonable. If I look at corporate transactional revenues, we've invested in digital there. That grew about 12% in the half. So I think the message would be that Absa is back in the market. We're there for our clients. We assisted our clients through COVID with payment relief, and we're seeing a lot of healthy sort of business volumes come through at the moment.
Yeah. Now, SA's energy crisis, Jason, has been in the spotlight, and many lenders are starting to offer loan options for households looking to install solar in their homes. Is Absa doing the same thing at the moment? And if you are, what does the financing options for these projects look like that you are offering customers?
Yeah, so we've got, through our home loans business in South Africa, exactly that product suite to enable customers to go off the grid, so to speak, within their mortgage capabilities, already in place. We've got strategies with partners and the like to ensure that our customers have a good experience with respect to the technology that can be landed in their homes. I think it also goes a step further for us. It's not just around our, let's call it customers. It's also about our commitment to renewable power to ensure that the reliance on Eskom is reduced. Very supportive of the president's plans that he announced a couple of weeks ago We took a strong leading market share in the last round of renewable powers, that window, bid window 5, where we took about 80% of those, or our partners and the clients took about an 80% share. So I think we're certainly using the strong capital levels that we've got to assist with this parliament, to assist our clients with the transition.
Thank you very much to Jason Quinn for joining us this evening. He's the Group Financial Director at Absa Group, talking us through the financials that they posted today, interim financials, and really just the outlook for the business despite the tough economic trading environment. And that's all your business and news for now. Sally will be back in the next bulletin with more updates.
Wonderful. Thank you so much.